Target stores have been in existence for just about as long as anyone can remember, but it just might be time to say farewell. What are the facts behind Target disappearing from the retail landscape? Let's find out. You probably didn't notice, but Target has been stuck in a rough patch since early 2022. However, more recently, it's starting to look like the rough patch isn't going away anytime soon. With disappointing financial results, executives and investors are seriously worried, and it's got the whole retail world buzzing. How does a retail giant stay afloat when sales keep dropping quarter after quarter? Just recently, Target revealed it faced its first full-year sales decline in ages, with losses piling up for 4 straight quarters in 2023. And guess what? 2024 isn't any better. Inflation has shoppers skipping out on non-essential items, which make up over half of Target's inventory. In October 2023, Target found itself in a troubling position, reporting its first full-year sales decline in 4 years. Between Q1 and Q4, sales dropped an average of 3.7% per quarter, a stark contrast to 2022, when growth had already slowed to a meager 0.8% year-over-year. Now in 2022, the company managed to stay afloat despite declining sales volumes by slashing prices across thousands of items to entice hesitant shoppers. However, this strategy took a huge toll on profits. By the end of 2023, Target's profit margins were in free fall, plunging at 49% in Q1, 90% in Q2, 54% in Q3, and a staggering 550% in Q4. These losses added up to an estimated $8 billion according to retail analysts. And in 2024, things have only gotten worse, with inflation hitting hard and American purchasing power shrinking. Target's middle-class customer base is feeling the squeeze of higher prices, leaving the retailer struggling to find its footing in an increasingly challenging economic landscape. Target's third quarter was so bad that the company's stock took a nosedive, plummeting over 20% in just one day, marking its worst performance in years. Earnings came in far below expectations, and sales growth hit a wall. In 2024, Target's sales have been on a losing streak for 3 straight quarters, and the outlook for the fourth isn't looking much better. Even investors are bracing for yet another unprofitable quarter, and they've been ditching Target's stock at an unprecedented pace as a result. Since its peak, the company's shares have plummeted by a staggering 43%. The company is now doing all it can to stay in the game, but it might not be enough to avoid disaster. Store closures are piling up with the excuse that people just aren't buying anymore. But the question is, how did one of retail's biggest names end up in such a tough spot? Well, one of the biggest reasons behind Target's slump is a big misstep in how they've been managing their merchandise. Instead of focusing on the essentials that people actually need, like food and household items, Target has stuck its guns selling things like clothing, decor, electronics, toys, and party supplies. The problem? Those aren't exactly what shoppers are prioritizing right now. Meanwhile, rivals like Walmart and Costco have been smartly leaning into the demand for food and other essentials, expanding their offerings and snatching up more of the market. With almost 60% of Target's business tied to non-essentials, they've really struggled to adjust, and now they're finding it harder to keep pace with the competition. Target has also been facing a lot of complaints from customers about the quality and availability of fresh produce. Many have pointed out that the grocery aisles often look understocked, with limited options, especially fruits. On top of that, Target has been raising food prices much faster than its competitors. Between January and December 2023, grocery prices at Target jumped by 21% according to Google. Meanwhile, Walmart and Costco kept their prices more steady, even slowing price increases by October 2023. As of now, Target's grocery prices are 10% higher than Walmart's and a whopping 18.6% more than Costco's. It's clear that Target's pricing strategy has backfired, with their competitors offering better value and deals, exactly what most shoppers are after right now. And beyond groceries, Target is grappling with declining sales in areas like apparel and home goods, largely because consumers are cutting back on non-essential spending due to economic pressures. Add to that some negative publicity surrounding certain product collections, and it's no wonder Target's stock has taken a hit. Investors are starting to worry about how quickly the company can bounce back. Meanwhile, competitors like Walmart are outperforming Target partly because they cater to a wider range of customers and are better at using their stores for online order fulfillment. Target, on the other hand, has been hit with higher costs due to inventory mismanagement, like overstocking items in anticipation of port disruptions that never came. While Target has made headway in areas like beauty and food products, its heavy reliance on discretionary items like clothing and home goods is proving to be a major challenge. Another big part of Target's struggles can be linked to the overall state of the economy. The company noted that consumer demand has slowed, especially for non-essential items, as shoppers become more cautious due to economic uncertainty. But it's not just the economy. Target's inconsistent execution has also been a factor. For years, the brand has prided itself on offering a more premium, curated shopping experience compared to other big-box stores. However, this approach hasn't always been received well, especially as consumer priorities shift and the competition has adapted more quickly to changing trends. Inflation has completely shattered Target's premium image. As consumers became more price-conscious, they started prioritizing needs over wants, turning to value-driven retailers like Walmart and Costco. In response, Target's been working hard to rebrand as a value retailer, cutting prices, ramping up promotions, and adding more essentials like food. This was essential to stay competitive, and it's had some success. Store visits are up and food sales are growing faster than other categories. But Target's not in the clear yet. In trying to adjust to changing consumer needs, Target may have lost sight of what made it unique in the first place. Is it a grocery store, a discount retailer, a more premium shopping destination, or as some have suggested, a department store? The lines have blurred and it's now unclear who Target is really competing with, whether it's other retailers in terms of customers or in market valuation. However, executives recently outlined a series of actions they're taking to stop the problems Target is currently facing. For the holiday season, Target rolled out plenty of deals and brought back Merry Christmas in its branding, trying to reconnect with more traditional shoppers. They also include some short-term moves like teaming up with Taylor Swift for an exclusive Black Friday release, and long-term projects such as growing the Circle 360 loyalty program and expanding their advertising business. They also plan to keep cutting prices and running promotions throughout the holiday season. CEO Brian Cornell's feeling optimistic, insisting that the company will stay on its current path and meet customer expectations across the country. Still, despite the holiday push, Target stock has dropped around 21%, signaling that investors aren't quite sold on the idea that these moves will be enough to turn things around. Meanwhile, several experts have made their thoughts known on what could help Target bounce back and improve its stock. Bowlig suggests Target should focus on high-margin products that customers prefer to shop for in person, like home decor, beauty, women's apparel, and pharmacy items. On the other side, Target could scale back on inventory in categories that are easily purchased online, helping to reduce costs and improve profitability. If they can find a more profitable, higher growth but smaller set of categories to focus on, that's going to be a winning formula, instead of slowly losing share across the board, Bowlig explained. Another analyst expressed similar thoughts. He believes Target needs to regain its footing in discretionary categories through better merchandising. The good news is that historically this has been one of Target's strengths, so it is possible for them to turn things around. Another area where Target could find success is groceries. While fresh food might not be the most profitable sector, it's great for driving foot traffic to stores. But to truly compete with heavyweights like Walmart and Kroger, Target will need to invest heavily in building up its infrastructure and supply chain to keep groceries fresh and meet customer expectations. It's not only about stocking shelves, it's about doing it right. David Wagner, head of equity and portfolio manager at Aptus Capital Advisors, believes that improving its supply chain efficiency could be a key way for Target to boost its finances. By doing this, Target could increase its operating leverage, which would help with profitability. Compared to other retail giants like Walmart, Costco, and Amazon, Target doesn't have the same level of operating leverage. These big players can spread their fixed costs across a huge and growing sales volume, which helps improve their margins. Since Target sales volumes are smaller, it's been harder for them to dilute those costs, putting more pressure on their profitability. Getting sales growth back on track would obviously help with leverage, but in the meantime, squeezing out some extra margins through supply chain improvements could give the bottom line a much-needed boost. In 2023, Target announced plans to invest between $4 to $5 billion in improving its stores and supply chain network, aiming to boost efficiency and drive growth. Another potential strategy for Target is to consolidate its 45 individual private label brands. While some like Threshold, Cat & Jack, and Good & Gather have become well-known names, consolidating smaller brands into a single, more recognizable one could have big benefits. John Tomlinson, Global Director of Research at M-Science, suggests that Target could follow Costco's playbook with its Kirkland signature brand by merging some of its smaller labels. This could not only increase brand visibility and consumer recognition, but but also help cut costs by reducing the need to build out multiple individual brands. So no need to panic just yet, but things could get interesting. Target's rocky performance over the past year has made it a potential target for activist investors who often push for changes in the leadership team. If Target's struggles continue into the second half of 2025, it wouldn't be surprising to see an activist investor step in, especially if competitors are doing better and the overall consumer environment improves. Those in charge of this mega retail brand need to turn things around, and soon. Well, that just might be the end of the Target dominance in the retail world. That's all for this video on Target is disappearing from the retail landscape. Here's why. What do you think about Target closing up? Let us know in the comments section and enjoy our other videos.